there's a growing risk of a major financial accident that could cause the market to crash later in the year. This could create opportunities for investors to buy high-quality assets at a discount. The global economy is in a difficult situation. There are a lot of risks, like inflation and an economic slowdown. Central banks are trying to fix the problem, but it's not easy. Wittman said the global economy is stuck in a perfect storm environment of supply chain frictions, contracting final demand, high inflation, rising interest rates, falling corporate earnings, and a potential financial accident. Some people think that if one part of the financial system fails, it could cause a lot of investors to sell their investments quickly. This could create an excellent opportunity for savvy investors to buy in at a low price. There are a lot of weak links candidates. These include zombie-type European universal banks, LBO-financed corporates, over-leveraged shadow banking players, and over-indebted emerging market sovereigns. The interest rates have increased significantly in the last 6 to 9 months. This is making it harder for businesses, consumers, and people with debt. Central banks worldwide have been trying to stop runaway inflation by making it harder to borrow money. This means that it will be more expensive to borrow money. This is happening because of things like Russia's war in Ukraine and high food and energy prices. Wittman argued that central banks were forced to begin tightening this year because monetary policy and liquidity conditions had been too loose for too long. He said policymakers, led by the U.S. Federal Reserve, are now scrambling to restore lost credibility. The tightening of monetary and interest rate policy will have some adverse, long-term effects. However, this normalization is much needed and welcome in the long run. Wittman said that if the central banks talk and act strongly against inflation, he thinks the outlook for stocks over the next few months is good. But he warned that there might be some problems in the short term as the rally we had last month fades. Wittman also said there are significant differences between the U.S. and Europe regarding energy and money. The U.S. is more self-reliant on energy and is better insulated from the risk of the war in Ukraine. And the Fed is doing an excellent job with monetary policy. People going through hard times are more likely to take risks and succeed in business. Stay tuned with us and check back for more information by subscribing to this channel, and don't forget to turn on the bell notifications.